Hi guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we're tracking as we get into this fresh trading week. And what a hectic week for us to start this trading week. There's so much happening on the global front as far as SVB's collapse is concerned. So we'll talk about all of that in just a bit. But first up, let's take a look at what's happening to the Asian markets after we got that weak handover from Wall Street. So most of them largely lower. And losses this morning are led by the Nikkei market. The Japanese market is down 1.7%. So that one definitely looking the weakest. But the Straits is down 1% as well. You have Taiwan trading with a 1% cut. What's holding up is the Hong Kong market. That's seeing a gain of over 1%. So that one is looking good. And the other market which is managing to trade in the green is the Chinese market. So the Shanghai market also up around 0.7%. But barring that, you are seeing cuts across the Asian markets. Not quite as bad as what we saw on Wall Street. But Asia is definitely starting largely on the back foot. The SGX Nifty will be up for you. It is indicating that we will get a weak start, around 50 points in the red. But this is after the sharp sell-off that we saw in Friday's trading session and, on Thursday as well. So right now, we do have a 54-point downtick on the SGX Nifty. So that's what's going on in the Asian markets. But let's talk about the US actually, because that's where all the action really came through. Wall Street ended Friday's trading session sharply lower as contagion fears continue to dominate with the collapse of Silicon Valley Bank. So all three major indices posted weekly losses of nearly 5%. The Dow Jones actually saw its worst week that we've seen since June of 2022, and only a couple of days after the collapse of SVB, crypto-focused lender Signature Bank also shut down. So regulators have now stepped in to prevent a contagion and systemic panic by announcing a plan to backstop depositors with both of these banks, who will now have full access to their deposits. So that is the US regulator stepping in to safeguard depositors. But the risk of a contagion and the fear of a contagion is what is really dominating sentiment on Wall Street. The US Treasury, Federal Reserve and the FDIC in a joint statement said that no losses associated with the resolution of Silicon Valley Bank as well as Signature Bank will be borne by the taxpayer. They stated, however, that shareholders and certain unsecured debt holders will not be protected. In fact, the regulators also said that they would make available additional funding to depository institutions in order to help assure that banks have the ability to meet the need of the depositors. So that is, some important news that came through. It's actually on the back of this that you're seeing a lot of the US markets now recover in the futures market. So the Dow Jones is up around 0.7% in the futures market right now. But